Micron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider monetizing.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us. Well, let's check what happened overnight. European shares slipping as investors focus on French elections this weekend. Wall Street saw modest gains as investors look to a key inflation report at the end of the week. The mega caps were mostly higher, with Nvidia surging before the close to erase earlier losses. Apple rose after Rosenblatt upgraded the iPhone maker's stock to buy from neutral, and Tesla gained as a broker initiated coverage with a buy rating. Shares of Amazon rose strongly to take the company's market value above $2 trillion, the fifth US corporation to cross that level. It was also boosted by Volkswagen's decision to invest up to $5 billion in the US EV maker Rivian, of which it's a major shareholder. FedEx shares surged after the delivery company forecast fiscal 25 profit above estimates. Shares in Whirlpool also jumped higher on reports that German engineering group Bosch is considering a takeover of the appliances maker. General Mills fell after the cereal maker forecast annual profit below estimates and posted a bigger than expected drop in quarterly sales. The major US banks, including Morgan Stanley, Citigroup and Bank of America, slipped ahead of the Fed's release of results from its annual banking sector stress test. Now, there was little macro data to trade on overnight, yet the US dollar and bond yields rose as markets await Friday's US PCE inflation data, which follows inflation data in both Canada and here in Australia, which have surprised to the upside. US new home sales have come in weaker than expected, falling more than 11% to a 6-month low in May. And US 10-year yields up 8 basis points to 4.31, the 2-year to 4.75. And the yen has sunk to its lowest level against the US dollar in almost 38 years, as traders look for signs of intervention from Japanese authorities to boost the currency. The gauge of Latin American currencies dropped to a near 8-month low as Bolivian armed forces seized control of Central La Paz, with the president denouncing the move as a coup against the government and called for international support. And the Aussie dollar is trading at 66.8 US cents. Did jump yesterday on the release of that stronger than expected inflation for May. All right, let's get a look at the market movements, particularly on Wall Street. Ira Epstein joining us from Lynn and Associates. Ira, good to talk to you again. Of course, Nvidia remains very much in focus. We also had Micron Technology out with results as well, pretty much in line. But how's the market responded?
Negative. In line doesn't do the job. You've got to be a beater in this market, because the secondary ones like Micron, chipmaker, and I call them secondary after Nvidia, everything's secondary. If you don't beat, you really got to beat, otherwise the market's subject to some profit taking here. And that's what's going on. Doesn't mean that anything's wrong with the company. It's just we're to the point where we've run up so much and put so much value into chip makers, the consolidation is needed. And if you're looking for everyday new highs, you're not going to get it. That's probably behind us for a little bit here. It's more of what I call now a churn. In fact, if you take a look at many of the different ETFs, and I'm talking XLE, XBI, I can go on, more have come down than up. So it's a market that has been carried by those 7 big names, and they are still carrying it. I mean, think about it. Amazon up today sharply, Apple up again. These markets are doing well. And of course, Nvidia, well, 2-day period down 13%, then you go up all of a sudden 6%. So it's back and forth churning, as I call it. And I don't think that'll go away until at least Friday morning, when we get to see the PCE number and see if that answers anything about what the Fed may or may not do. They want to see PCE numbers, because it's one of their favorite indices, show that inflation is coming down. If it doesn't, the Fed's on hold longer, and then that forces other currencies to have problems like the yen that you said. The yen intervention won't help it. It's policy changes that'll help it. Countries that throw good money after bad, that doesn't do very good other than for a few days. They've got to actually change the policy, stop buying US bonds, stop buying other parts that they have to, and start a policy of really raising rates. Because what they're doing is, while their export business is great as the yen is down to a 38-year low, what they're buying creates a lot of inflation. They first said that they wanted to see how the wage inflation, because the unions, when they negotiate, like in their auto, they do it at one time. Those numbers should be now setting into the market. They have to do something different, and the market is telling them that.
How wary are you, and markets, I guess, wary ahead of that PC number? Given, as I mentioned there, we have seen a reacceleration of inflation both here in Australia and also in Canada. I mean, that's the risk at the moment, isn't it?
That is the risk. What the Fed is trying to avoid, and I don't know that it can be done, is having to cut and sit, maybe even have to raise again. And, you know, your country tried the cut and they're sitting, and Canada's inflation has come back up. It's the same stories. So you really need this to embed or lock in. And that's the problem. Then the problem for the Fed is they have two mandates. One is full employment. The other is the inflation mandate. The unemployment rate is 4%. Now, if it starts clicking 4.1, 4.2, there's going to be a problem. When we get that jobs report next week, that means that they're behind the eight ball. So at some point, what they have to do is get ahead of the curve by abandoning their stated policy of just being data dependent and use some finesse and say, nah, we think it's time to make a cut. Let's see what happens. We'll cut once and see where we're at. And obviously they can only do that if the inflation numbers come down. So they've got a two-pronged battle. They've beaten the the labor, but it has come back from a 3.6, 3.7 to a 4% number. And now they need a weak PCE to at least give them the courage. At what point do they get ahead of the curve? I think if they wait too long, they hurt the labor market.
All right, ahead of the PCE number, we do have the presidential debate, the first one between Biden and Trump. Is this going to be more about personality than policy? I mean, clearly you talk about policy. Just look at the US debt at the moment. Are we going to hear anything on that from either of the candidates?
Listen, both of them are inflation freaks. That's the way to put it. Trump wants to cut taxes and spend. Same with Biden. They do it differently. They do it in different ways. And Biden keeps getting stymied. Now his student loan program, the courts have ruled that that's not going to go through. It's called the SAVE program, the way that it was. But will they be presidential tomorrow, or are they going to make fools of themselves? That's what I don't know. I mean, you can imagine the bull in a china shop has been Trump. And then we wonder if Biden will keep stumbling. Now, he's been in an airplane hangar. I mean, it's all over the American news for a week, as they have stand-ins like Trump throwing all kinds of rebate questions, is I guess the right way to phrase it, to things that will be said. The wise guy answers and all, and how does he handle that? What we don't want to see is a comedy routine. Can they be presidential? That's really going to be the question, and I have serious doubts.
All right, you don't sound as though you don't have much hope there. Ira, let's just refocus then on equities. So, of course, we're heading towards, well, very close to the end of the quarter now. We have seen some rebalancing going on. What are your expectations for the next quarter?
I think the next quarter can be in the summertime, just one where you meander. It's the third and fourth quarters it's the fourth quarter especially that I'll be friendly on. So we're coming to the end of the second quarter. The third quarter's often just one of these where you go back and forth because you got these inflation pressures. You have the election coming up. You still have relatively restrictive monetary policy. And then it typically, we get that end of the year rally, the Santa Claus rally, whatever everybody wants to call it. And that's where these markets come alive. I keep hearing people calling for 6,000 right away in the S&P. It's possible. This is not a market based on value. This is a momentum market. And when that momentum kicks in, it is the fear of missing out that takes place. And that fear of missing out, there's a lot of money on the sidelines here. What they want to do is jump into the markets, even at these valued levels. So it's a hard one to call. I'll be frank. I think it's going to be more of a trading affair in the third quarter, but I'm very bullish into year end.
Yeah, I mean, you call it momentum, but as we mentioned there at the top, just in terms of the video, we did see a correction in the stock, but you think that's just a blip at this point?
You know, I had been, as I told you, coming out of Nvidia. In December, I told my clients in my subscriber service to buy it. And then we started peeling off to the point we got to 30% long. So if you had 100 shares, you sold 70. Today, I told traders to buy back 5%. So the equivalent on 100 shares, they now have 35%, or because of the split, they have 350 shares. That's another way to look at it. Remember, we had that 10-for-1 split just recently. So I started again coming into the market because if you want to be wrong, this is the one you want to be wrong. All right. What's going to break it? That's what I don't know. There's no competition for this particular product. The biggest problem Nvidia has is people have to tell me that they can monetize it and make money with these expensive chips. If they do that, they probably got another year or two of this running just the way it is. I'm seeing that the street's going up to a 160 valuation, 155, 160 in a number of the firms. I'm not getting away from that. I think that they're right. Could we fall down towards 100? We could. And that'd be probably an area to buy more because their game's not going away. They have money. Now, what can they spend all that money on? 270 billion. One thing, giving money back to the shareholder. That's how I look at it. I mean, they're not able to buy other companies, really. All right, the government to look at it as a monopoly. They can only do certain things. They can buy smaller companies, but they're not going in and buying up their competition in the chip business. That I can tell you. So I think that's what traders are going to look at, that there's one way to give that money back in the end, and that's going to be it.
All right. Thanks for joining us on Lynn & Associates.
Thanks for having me.
Quick check of where we're likely to get going. Unfortunately, looking for a sharp drop at the open. As you can see, SPY futures off 1 1/10%. Now, a lot of that obviously a further reaction to what we saw from that CPI number yesterday, which was obviously hotter than expected and raises the prospect that the RBA could hike again. Stay with us. The open a couple of minutes away.